Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for June 28th, 2018. So as June winds down, boy, we've just had some ugly, nasty price action. Yesterday, we were served up one of the nastiest, I think, of price action out there. It's called a whipsaw. We had that early morning news that the administration's pressure on tech was less than expected, and we ended up with the market quickly reversing itself. We were down over 120 points in the pre-market to futures just spiking up immediately. Now that translated into the Dow moving up almost 200 points. But the pattern I'm talking about is this. It's called a whipsaw. And the bulls were unable to hold on to that. And we whipped all the way back down by the end of the day. And there are some things that you can do to avoid that whipsaw, and most of them require, just a simple set of rules. But the hard part is the discipline to follow those rules, because we all get caught up in that really dangerous emotion. It's called fear of missing out. And we see something happening like that, and we go, oh my gosh, it's over, I have to hurry up and get in. And the next thing you know, you get whipped out, handed a nasty loss. And what's worse is than the loss really is it destroys a trader's confidence in their ability, to the point that they can no longer even pull the trigger on a trade anymore because they've been beat up so badly, chasing around that emotion. So how do you avoid that? Well, one of the things you always want to do with a gap, a morning gap in the market, is first off, don't trust it. There's gaps are a manipulation by the market to get us motivated, to get us moving. And if we chase those moves, we can often be damaged pretty severely in that move. So just avoid that morning gap. And here's what I mean by that. And this is particularly true. If we have an index showing an overall downtrend, and we get a whip up or a gap up that's counter to the overall trend, that's one that you especially want to avoid. Okay, because it will often run into resistance levels someplace and then turn around and fail. So the way to avoid that is just to have a simple rule of saying, first, I won't chase gaps. Second, if the gap is moving and the stock proves, or the index proves, with follow-through price action supporting a breakout, then we can trade it. So what does that mean? Well, when a stock or an index or whatever is trending down, we want to wait for that push through to come. We want to wait for that pullback to happen, because that's normal price action. And this would be that intraday on a day like yesterday. We want to wait for that pullback to happen, and we want proof that there are follow-through buyers picking that up or supporting that breakout. And until that point in time, do not trust that gap. Wait for good quality signals for entry. Same thing is true on the upside. If we've been moving up and we get that big gap, you want to distrust those until you see proof supporting the overall trend. So I'm sorry for those of you that might have got caught in this. Write that down. Make that a rule that you'll never do that again, and work really hard on your discipline to prepare yourself for that. Now, yesterday I wrote about the importance of, having patience and discipline. Sometimes it's just better to stand aside. Yesterday turned out to be one of those days. So let's take a look at what happened here yesterday. Well, obviously the Dow tried to move up really high, ended up making a new closing low. It is setting right on this support area. But I got to tell you, that's not really an area that I would trust right now as being a strong level of support, especially considering we're quickly heading toward the weekend and there's been no change in the political uncertainty out there on this so-called trade war. So keep that in mind. Now, futures are pointing to a very slightly bullish open this morning, and that could easily slip negative as the morning goes on. So just be really careful. There's nothing here yet that suggests we should be in any kind of a rush to buy. And there's also nothing here that would suggest we should be chasing a short. Just as bad as trying to rush into a long too soon, the last thing you want to do is chase a short that's already well within its down move. Wait for the next entry into the trade. Okay, so let's take a look at the SPY. SPY, really some nasty price action here. And as you can see, I have my uptrend here on the SPY marked and the downtrend of the SPY, current downtrend. And notice what happened here. That whipsaw brought us right back up here to price resistance. Here's that price resistance. 3 levels of resistance right here. The uptrend that we failed, the downtrend, and the price resistance right here. We rallied right up to there, almost to the exact penny, before we turned around and gave it all back. That is what I'm talking about. Make sure you can actually see proof of follow-through price action supporting a break of a trend, not just a rally to test the trend as resistance. Let's take a look at the Qs. Qs had an ugly, nasty reversal yesterday. Once again, rallying up to the underneath side of this trend that I have marked. Now, please understand, there's nothing magic about how I mark that trend. Anyone can do it, and if it's slightly off on your chart, not a big deal. But you can see how we rallied up, but we did not breach back above that trend. All we did was rally up and test the underneath side of that, and then obviously sinking away hard, creating a new low for the day. That doesn't bode well for the Qs, at least at the moment. It actually suggests more lows to come. If we look at IWM has been our strongest index, and here again, that rally up, we tried to push higher yesterday, come up really close to testing that resistance level, and then bearish engulfing candle pointing to more lows, and now the high probability that we will come back here and test this breakout. It is possible we could test a support level right across here, though. So keep that in mind. Pretty bearish in the price action, and all of these candles are give the impression that more lows could certainly be on the way. So let's take a look at the VIX. The VIX yesterday on that gap up, obviously we broke down below that support level, and it looked like we were going to break that down, but that whipsaw came and we pushed right back up, closing at a new closing high here on recent price action, and holding that support. Not a good sign that we're going to hold that support in this fear index, and it looks like fear could be rising here just a little bit, so be really careful of that. Let's take a look at T21 22. T21 22, the 4-week new high new low ratio, and you can see this might be just a little bit of sliver of good news, is that we're getting close to this area where we would expect that bullish reversal zone to start to kick in. So we're getting down here. We still have more room to the downside. Please understand, this does not necessarily mean that we're going to come down here and pop straight back up. It's not what it means. We can linger down here for a while. So just keep in mind that we're reaching a point where we may be getting closer to the bottom, closer to that reversal than we have been. So don't chase a short trade down here. Be watchful of clues for that potential relief rally to occur. Let's take a quick look at the economic calendar today. We have a big economic calendar today, but only two things that really has the potential for moving the market around. First, GDP numbers. GDP numbers are expected to come in good and strong, showing that our economy is in pretty good shape. As far as that goes, and actually it's not showing a lot of pressure either, inflation wise, in these numbers right now. Jobless claims are expected to continue to be very strong and continue to show a really strong labor demand. So probably no change there either. We have a bunch of other reports today. We have do have a Fed speaker, some bond auctions, but none of those should likely move the market around. On the earnings calendar, we have about 18 companies reporting earnings today. Some of those have already come in. Probably the ones to pay attention to come in the afternoon, like Nike. Nike reports after the bell today, and also I think it's KBR. KBR reports. No, it's not KBR. It's another builder. Just a second here. I think KBH. Yeah, KB Homes. They report after the bell today, so kind of keep an eye on those. Those might have some effect on things. Those would be probably the most notable of the day. So with that, everyone, hey, I want to wish you all a fantastic day. I want to wish you great profits. And if this is the first time you've seen these videos, please do me a favor. Click on that subscribe button on YouTube. Click that follow me button on Facebook if you happen to watch this video there. Also, click those thumbs up buttons. That helps me out a lot. And drop a comment if you feel these videos are worthy. Also, always feel free to share these videos with friends and family. Everyone, I want to wish you that great day. Be very careful. Be a little bit cautious as we head into the weekend. I know I'm going to stay cautious. I'm going to be keeping most of my powder dry. It's unlikely I will be making any new trades until we get past this weekend. Everyone, take care. Have a great one. We'll talk to you all very, very soon, bright and early tomorrow morning.